Welcome to Hargreaves Lansdown's Meet the Manager. I'm Joseph Hill, and today I'm joined by Andy Jones, manager of the Janus Henderson UK Responsible Income Fund, which features on our wealth shortlist of funds selected for their performance potential. So Andy, the fund can invest across the UK stock market. So what opportunities are you seeing there at the moment?
The UK stock market continues to look very attractively valued, we think, both in relation to its own history and other markets when we look globally. Now, I know recently there's been a lot of negativity around the UK economy, but we don't think it's quite as bad as the headlines suggest. In particular, we think the consumer's in quite good shape. We think balance sheets are in good order. We still think there'll be real wage growth. And encouragingly, we do think that interest rates will come down over the next year, albeit at a slower rate than we maybe would have seen. So as a result of that, we do think there's a lot of value in domestically focused areas at the moment. So we're finding particularly interesting opportunities in the property sector, the construction sector, as well as the more defensive utilities area. Now, across all of those areas, we do think we'll get good dividend growth from already attractive yields. And as I mentioned earlier, we do think they're very attractively valued. Even away from the domestic areas, we do think there's very good value in other sectors compared to international peers as well. And one example of that would be the healthcare area, where we think despite improving prospects, companies are valued at a very modest rating compared to their international peers.
And so the fund's investment approach screens out some areas of the market and excludes them from investment. So as a result of those exclusions and the opportunities you identified, how are you investing in the fund?
So the fund is 30 years old and has very long-standing exclusion criteria. So what that means is that the fund is not able to invest in the oil sector, tobacco sector, alcohol, and also excludes most miners. So what we do from the portfolio construction point of view is where we can find attractive ideas, we try and make sure we mimic those excluded factors as best we can. So for example, for the defensive stocks that are excluded, such as tobacco, we try to find those areas of the market that may be more robust as well in our permitted universe. So for example, we can buy more resilient media companies. We can find utilities that will grow well over time. Similarly, with the cyclical areas that may be excluded, such as miners, we can own other industrials which have very good long-term prospects and are also similarly correlated to GDP.
So Andy, reflecting on your career so far, what top investment tip have you picked up along the way that perhaps you wish you'd known at the start?
It is just so important to avoid short-term noise when you've got a fundamental long-term view. Over time, things can change so very significantly that it's always important to go back to where you started and not get distracted by short-term factors. So resilience and fortitude when things might not be going your way short-term is important if you still believe in the long-term case.
And who would you say has had the biggest influence on you as an investor?
When I started my career as a graduate nearly 30 years ago, Nick Train was a very senior portfolio manager on the desk, and his very long-term time horizons is always something that's remained with me. We probably look at different areas of the market these days, but nonetheless, that long-term approach and again, fortitude and resilience have always stayed with me over time.
And outside of work, how do you switch off?
I still enjoy watching rugby and I really enjoy listening to music, and very recently I've even been able to find some concerts that my daughter's happy to go to with me as well, so that's been particularly enjoyable this year.
Thank you for joining us.
Thank you, Joe.